I know that most of you guys are probably here for shiny P&Ls, big profits and that kind of stuff. But in today's video we are going to discuss a bit of a different topic, which is a losing trade that I took the other day on AVEX, where I lost a bunch of money. And as you guys know, I never talk numbers, but imagine I lost a bunch of money. And in today's video I will exactly be explaining to you guys what went wrong on that trade, why I maybe shouldn't have taken that trade, and if I would do it different next time. To those that don't want to learn, that don't want to study, you can skip this video right now. To those that really want to study, that really want to get better every single day as a trader and want to become profitable one day, make sure to keep watching, because today's video is going to be very educational and I'll be providing you guys with one of my favorite entry models. Okay guys, so first let's discuss why I took this trade, because I think that this chart is an absolute beauty in my opinion. Because what we can see over here is that we have a beautiful range, right? With range pivot 1, range pivot 2, range pivot 3, range pivot 4, 5, and range pivot 6, right? For the range high. So those are a lot of pivots already for the range high, which is giving us a high probability range high. We saw a beautiful deviation above the range high, leading to a push to the range low liquidity pool beneath these lows over here. And we can also see that the range low got respected many times as support as well, giving us a very high probability range. Now what we were seeing is that the first smaller deviation below the range low was being followed up by a second bigger deviation below the range low. This second bigger deviation was a high probability deviation and a high probability mitigation of a liquidity pool. Now why is that? Because when we analyze this structure over here, we can see that that structure was engineering a lot of liquidity beneath this low. Why was there a lot of liquidity being engineered beneath that low? Because of this fake breakout above these highs and above this range high. Because of this fake breakout and this fake break of structure over here, a lot of people started breakout longing the price of AVEX, or they started pullback along the price of AVEX all the way to the downside. Now where do we think that those people are placing their stop loss? They're all going to place their stop loss beneath this low over here that initiated this impulse that gave us this fake break of structure and that fake breakout, right? So there was a lot of liquidity engineered, and by taking out the liquidity, the high over here, they brought us to this lower low compared to this low, they brought us to that high over here, became very significant all of a sudden, because it brought us to a lower low. Now after the second deviation, we push back into the range, we displace above this displacement and this displacement to the downside, which was the first very strong sign of strength. Then we made another push to the upside, and eventually we shifted structure over here, right? We opened and closed over here multiple candles above the significant high on the 4-hourly time frame, and also on the daily time frame we can see that we opened and closed a candle above that significant high. And at the same time, we also broke out finally above the pivotal range high that was providing us with a lot of resistance many times. So that means that either I should be looking at a potential deviation above the range high to target the range low liquidity pool, or I can potentially play a breakout over here and use one of my two entry models to play a potential breakout on AVEX. Now I decided to go with the second option in this case. Why did I decide to go with a potential breakout play instead of a potential deviation play over here? Because we already took so much liquidity over here beneath that range low, I don't think that we will ever visit this low again, right? So higher time frame wise, that's my invalidation. Now that's also maybe where I made the mistake in this case. But first let's talk about the entry model and why I entered the way that I entered and why I got a trigger to execute a potential long. Because just breaking out above the range high and determining that there's no drawn liquidity beneath the range low anymore doesn't necessarily always mean that you can blindly start looking for longs, right? In order to start looking for longs at the range high to trade a potential breakout, there's two ways of playing it. So first let's apply the range over here. Let's say we indeed push above the range high, right? So we mitigate the range low liquidity pool, and then we push above the range high over here. There's two ways of playing the retest of that range high. There's two ways that I can potentially enter over here if I determine that the bias is aligning higher, right? There's the way of playing the perfect retest of the range high level and push it higher, with your invalidation beneath this low and beneath this demand that forms around the range high. That's way number one to play it. Way number two to play it is to identify that there's liquidity resting beneath this low, then wait for price to push back into the range, take out that liquidity, no entry yet, until we reclaim the range high level one more time, in confluence with the break of structure, and also then you have yourself an entry trigger with your invalidation beneath that low, and you can target higher time frame buy side liquidity. That's entry model number 2. Now this is the safest way to play it, but why did I use a limit entry in the case of AVAX? Why did I have a trigger to start looking for a long with a limit entry over here, with my invalidation over here, and then targeting higher levels on AVAX? It's due to the fact that if we put in a valid inducement above that range high over here, and there's valid liquidity resting beneath that front run of that range high, only then I can use a limit entry up on the sweep of that low into that range high area. Then I can use a limit entry with my invalidation beneath the demand, and then I can target higher levels. And in the case of AVAX, right, this entry model was present on the chart, because when we zoom back into AVAX and I go onto the 1 hourly time frame, we can see that right above the range high level we formed an absolutely perfect inducement right over here. We indeed had the demand that was coming into the market over here that gave us this impulse, right? We had a pivotal range high area. So I decided that this inducement was providing me with the opportunity to long over here, put my invalidation over here, and target high time frame buy side liquidity, right? Because there was no sell side liquidity resting anymore to the downside. So I got my trigger for AVAX. Well, we saw a decent reaction over here. Then we went for our second entry, which is always beneath the first low where a lot of people put their invalidation. And then over here we made another push up, but unfortunately we failed to break structure, right? If we zoom into the 1 hourly time frame, we closed one candle above this significant high, but we failed to open and close a candle above the significant high. At this point, right over here within this consolidation area where I could see that the price was failing to open and close above this high, I should have moved my stop loss to break even. My break even point at this time, I think it was around here, and I should have moved my stop loss to break even instead of keeping my stop loss at this low over here, or I at least should have tightened my stop loss beneath this low over here to mitigate some risk. So execution wise, I'm satisfied with the way that I played it. This is an A+ setup for me, and I would take this every single day of the week. It was according to my bias. We got our long trigger by the breakout and the fact that there was no sell side liquidity resting anymore to the downside, but there was a lot of buy side liquidity resting towards the upside. We had that beautiful inducement above a super high probability range high area for AVAX. Right? On the other hand, as well, what was super nice about this setup, in my opinion, is that when I switch on the EMAs, we can see that the 100 EMA and the 200 EMA were exactly aligning over here with our area of interest on the 4 hourly time frame. And I think the exact same goes for these EMAs on the 2 hourly time frame. So we had some beautiful EMA alignment as well with our POI. And I definitely think that execution-wise, there wasn't a lot of things wrong with this trade, right? The only thing I could have done better, in my opinion, was manage the trade a lot better. Over here, when I could see that we were deviating above the 100 EMA, and when I could see that we were swing failing this significant high on the 1 hourly time frame, I should have moved my stop loss to break even, or at least tighten my stop loss beneath this low to mitigate some risk. That's also part of trading, obviously. You will always have to react to what the market is providing you with. And when I could see this, I should have moved my stop loss to break even or beneath this low to mitigate some risk. Now, looking back in hindsight, that's the only thing that I would have done differently. Because when I look at my entry models, when I look at my trading system, this is exactly the way that I want to trade trades like this. If I see a chart like this is absolutely chart porn to me. But you always have to realize that the game of trading is a game of probabilities. And it doesn't necessarily mean that if you have a strong trading system and that if you get an A+ setup, that A+ setup is going to play out 100% of the times. You might have the strongest trading system, but the trading setups, even though they might be A+, still may have a probability of winning maybe even 60%. The RR, for example, of this trade, it was quite high. Because if we would have met my target over here, with my invalidation over here, and my first take profit target was the high over here, right? Then we would have already been looking at an RR of approximately 4. That means that, let's say I would have lost this trade, this A+ setup, twice, and I only would have won twice with this RR of 4, I still would have gained 6R with only a win rate of 50%, right? So your trading system doesn't always, isn't necessarily defined by your win rate, right? It's obviously the win rate in confluence with your RR, your risk management system, right? And the way that you execute and perform your trades. The way that you remain patient and you patiently wait until the market provides you with A+ setups. And right now on AVEX, I got an A+ trigger. So am I satisfied with the way that I executed this trade? 100%. Am I completely satisfied with the way that I managed this trade? 100% not. I should have done better, right? But I was busy this day. I was recording a lot of podcasts and I was recording a day in the live vlog as well, which is going to be online very, very soon on our channel, which is going to be very, very nice. But that is also part of the game, right? And yeah, I think looking back in hindsight, there's probably always things that you can tweak about your trading system. But I know that over a longer period of time, it's going to be profitable. So am I worried about this loss? No. Did I want to make a video about this loss to show you guys that trading is a game of probabilities, and that even though you might have the strongest trading system, you can still hit a stop loss, and that you should never ever doubt your system, but only tweak it where potentially possible. And that's the reason why I made this video. So if you guys watched today's video up until this point, I hope that you guys learned something during today's video. If you guys did enjoy today's video, I would appreciate a like on this video and a subscribe to our YouTube channel. I want to thank you guys very, very much for watching, and I'll catch you guys on Monday's video. Ciao, ciao.